turned $2,000 into $8,000 in less than 2 years with a simple strategy that has been consistently making me 100% gains over and over, which I'm going to explain in this video. I'm going to share 5 essential tips that has made this possible, but you need to know all of them in order to maximize your return. By the end of this video, you'll know exactly how I did it and how you can apply this to your own investments. Let's go back to 2020. The pandemic hit and the market crashed over 30%. People were panicking, wondering if this was another 2008 crash or if things would bounce back.
Down 1.7% here, a loss of 37 points or so. Apple shares are just getting hammered this morning.
We're down by between 3 and 4.5% generally across these markets. Red everywhere, essentially, down by 4-5%.
Well, the markets did recover, and you're probably thinking I'm just gonna tell you to invest whenever the market is at its lowest, which you should have, but we're not gonna wait for another market crash, because the truth is waiting won't really build your wealth, but acting will. So let's get straight into how I made 300% gains in less than 2 years with tip number 1. Be fearful when others are greedy, and greedy when others are fearful. You know, the guy that's been like investing since he was 3 years old. Anyways, this single tip has made me thousands of dollars and put me ahead of 90% of people. Most beginners buy stocks when everyone else is excited. You know, when there's hype, skyrocketing prices, and flashy headlines.
Welcome to the Cybertruck unveil.
They don't have an actual strategy. They just buy when it feels right. But the problem with that is that that's not investing with logic. It's investing with emotion. And it will also cost you a lot of money if you try to trade this way. Just imagine all the people that bought GameStop at its peak. They followed the crowd and lost really big. Let's compare that to when Tesla dropped at its lowest in 2024. People thought the company was doomed and the news was painting a grim picture. But the difference is I didn't buy at the GameStop peak. I bought at the Tesla low, and just a few months later the stock had already doubled. When I saw a stock at a downward trend and people were panicking, I knew it was my chance to be greedy.
I want you to deal with your problems by becoming rich.
I bought when others were selling in fear. Why? Because I understood this simple truth. The crowd is usually wrong because they're not thinking about tip number 2. Understand why the price has gone down. Now, just because a stock is going down, it doesn't mean you should just buy blindly. You need to kind of ask yourself what is going on and what is happening to the business. Did the company report bad numbers? Are the competitors taking over market share? Or is the fear just based on like some news or some temporary stuff?
It seemed to cut my learning curve.
When Meta released that they would switch their name from Facebook to Meta and that they would invest more in VR headsets, the stock fell almost 80%, which kind of makes sense because it's a new strategy and there's new fears involved. But it also didn't make sense because of tip number 3. Find out if the fundamental business has changed. Here's the thing that most people got wrong. Even though Facebook changed their name, they still owned Facebook, Instagram, and WhatsApp, and these platforms were generating billions in revenue every single year. The drop in the stock price wasn't because the fundamental business was failing, it was because of their new investments, which impacted their profits in the short term. Yeah, they were investing heavily into VR, which kind of hurt the short-term profit. But their core business, which was already making money, didn't change it at all. So when you see a stock drop, don't just look at the headlines. If the company is still strong, you might have found yourself a bargain.
You smell that? What is that?
What?
What's that smell?
A cologne?
No.
Opportunity.
No. Money.
Okay.
I smell money.
This is where I made my move. The fundamentals were strong, so I invested, knowing that the fear was not justified. But still, this does not matter in the long run if you do not follow tip number 4. Do you see the company still existing 10, 20, or even 50 years from now? Before you buy, ask yourself this question. Will this company still matter decades from now? Let me tell you a quick story about Nokia. They were revolutionary in the 1990s and the 2000s, with a stock price that skyrocketed over 70,000%. But by 2008, the iPhone came along. Nokia failed to innovate, and they failed as a business. When I invest, I don't just think about today, but I also think about the next 50 years. Companies like Apple and Amazon has proven their staying power by continually innovating. But others like blockbusters failed to evolve. This mindset keeps you focused on the long-term growth rather than the short-term gains. You don't want to invest in companies that are made for yesterday. Focus on businesses that can thrive in the future. But which companies are you supposed to buy? Perhaps your dad told you about a good company, or maybe Logan Paul told you about CryptoZoo. But before you buy anything at all, you need to know tip number 5. Don't buy recommended stocks. Buy businesses you understand. Investing is kind of like dating. If it sounds too good to be true, it probably is. But if it's free pizza, it's most definitely a scam. Oh, what the Here's the thing. Not me, not any YouTuber can predict what a stock will do in the future.
Nobody knows if the stock is going to go up, down, sideways, or in fucking circles. Least of all stockbrokers. Right? It's all a fugazi.
If someone tells you a stock will skyrocket, take it with a grain of salt. The best way to win is to invest in businesses you understand. I bought Meta in the 2022 dip, Tesla in the 2024 dip, and Alphabet in 2023. Why? Because I believed in the business. I read the reports and I trusted my own judgment. These weren't guesses. They were informed decisions. No one ever told me to invest into these companies. I asked myself the 5 tips that you learned today, and they guided my every decision. And here's the best part. I'm not selling these stocks myself. I'm holding them for years because I believe in their long-term potential. So which companies do you believe in? If you want to build wealth, you start with companies you understand. Ask the right questions, avoid the hype, and stay in it for the long term.